Hi, folks. Welcome to today's Bobcast. My name's Bob Benny.
I'm Jessie Thompson.
And we're both certified financial planners with Bob Benny Wealth Management.
Today, the weekly Bobcast topic that we're going to be talking about is one that we talk about with people in the office probably on a weekly basis. It's a question that we get asked a lot, and it's a concern a lot of people have before they retire. And that question is, should I pay off my mortgage early?
That's a good question. Should you pay off your mortgage early? Probably not, but it depends.
Well, I've heard people on the internet, on YouTube, certain famous personalities say that I shouldn't have any debt and that I should work hard to pay my mortgage off as soon as possible.
I disagree, especially depending on how low your interest rate is. You know, paying off your house does not put you in any kind of a different financial situation.
From a net worth
perspective, you know, if you have a house worth this much and you have this much debt on it and you pay this much debt off, you're taking the money from somewhere else to pay that debt off. So your net worth is exactly the same before you paid. You know, if you take it, if you owe $100,000 on your house and you take $100,000 out of your investments to pay off your house, you're in the same net worth situation as you were before. But what often, when people ask this question, what we say is, well, what's your interest rate at? And I can't believe it. But so often people will say 2.5% or 2.75%. My goodness, those are the lowest mortgage interest rates in history. I think, at least in the history of my life. We're never going to see those again, I don't think. And right now you can get 4 or 5% at the bank on your money, let alone what you can get if you have it properly invested and diversified. So by all means, do not pay off your house early if you have a super low interest rate like that. Now, as interest rates go up and get higher, then it might make sense to pay off your house early. But go ahead.
I think the bottom line, like rule of thumb, would be if you can get a safe rate on an investment that's higher than what the rate on your debt is, do not pay off that debt.
Yeah.
Invest the money instead. And if you're concerned about the payments, invest the money and you can pay the payments out of your investment rather than just paying it out of money that's not working for you or doing anything for you.
Yeah, so like, you know, we talk to people about thinking about paying off their house. They owe, say, $100,000 and they have $100,000 in the bank, maybe not making very much. Well, let's get the bank, you know, find a bank account or a money market account with us or something that's going to pay you 4% or 4.5% or something like that. And if your mortgage is only 2.5 or 2.75 or 3 or something like that, make your house payments out of that account as it's earning money and do it that way. That's the way to do it.
That's the smart way to do it.
But you're not putting yourself in any kind of a better of a position by paying your house off early.
Right. Thank you very much. If you like this video, make sure to like it on YouTube and subscribe if you haven't, and share it with anybody that's thinking about paying off their house early.
Thank you very much. Have a blessed day.